Hey, what up, y'all? It's your boy Degenerate coming at you September 3rd, 2019. I'm gonna start this off just saying that this is propaganda. Everything that you consume that is meant to make you critically think about your position in life is probably propaganda. And I am trying to persuade you to think quite a bit in this video. But I think that you'll benefit by asking these questions. I feel like I've benefited by asking these questions. And I guess the question is, what is money? And what is a safe store of value? And just what I'm looking at. It's kind of doom and gloom, but I want to start it off additionally saying that where we are in life at the moment is incredible. We have never had more opportunity with production in terms of comfort, in terms of food and taste and sights being available to us. We have fucking YouTube. That is incredible. We can consume mass amounts of information on YouTube for free. And our parents couldn't even imagine that. Our grandparents didn't even have fucking color television probably. And here we are able to probably go some restaurant a couple miles away and try like 5 different fucking cheeses, and that's fucking killer, dude. Our free market economy has really given us a lot of choices, and life satisfaction should be at an all-time high if we don't compare ourselves to others, because this life that I have is my game, the life that you have is your game, and it's solely each other's games. Other people's time is not our own time, and what I do or what you do doesn't affect anyone else besides yourself and maybe those real in your inner circle. So be positive and try to help others when you see that they need help. And I'm here just to talk about what I'm learning in an economy, and hopefully you can benefit from it as well. If you have any questions whatsoever throughout this, just write them down, hit me up, let me know, and we can talk more, and I'll share where I'm learning this, and hopefully you can benefit and teach me something as well. Forgive me if I get any terminology wrong, but I love you, and I hope that we progress together. With that said, I'm going to pull up a chart. Remember, all of this is propaganda, and that I love you. So, quick basic chart. This is Bitcoin in comparison to the US dollar. This is a monthly chart. We're only looking at monthly charts today. We're going to be looking at currencies and bank stocks. We're starting it off with Bitcoin. This is bullish. It's only a day into this month. We normally have wicks up to here. I would expect around here, if anything else, there to be short sold. But if not, it looks like a fair game, right? I think it looks like a fair game if you want to long it, especially after this 710, 760 close. If that is a daily close above that, fuck, dude, just long it. God, keep your stops reasonable, of course. Like, don't gamble your whole account. Money is abstract value. When I say we, I mean like your government. They print more money each year, and our purchasing power decreases with that same value of money. And hopefully, whatever you're getting paid rises, but not always. Like, if you're not getting a 3% raise a year, or at this point a 1.5% raise a year at your job, like, you're getting fucked. You are making less money technically in purchasing power than you are the year before, and we obviously don't see it instantly, but it happens over time. Prices always even out. The only limited bit in our economy is money at the moment. If you only have so much money printed, you can only spend so much money. But if other companies have more money, they could always build new factories, produce more of a product, or get robots to produce more of a product. Okay, let me roll it back here. Inflation in an economy is great. It's beautiful when you have debt. And I mean just general debt. If you have debt that grows at an interest, it's a little bit more complex, but let's assume that you have debt and you don't have any interest building on it, okay? Let's look at a treasury yield. If you have debt and you now get paid more money, right? So you have debt, you get paid more money. That debt level is easier to pay back because you were getting paid $10, now you're getting paid $12. You get a 20% raise. Whoa. And that can now help you pay back that debt faster. So inflation, when you have debt, is great. If the total account, that car that you bought for $6,000 is easier to pay back when you make $6,000 more in a year, but generally it happens over time. Like I said, really, if you get less than a 1.5% raise at the moment, based off of this number, whatever this treasury yield is, you get fucked if you get less than this of a raise a year. And if you get more than that, your debt's easier to pay back. Countries that have savings, overall countries that have Switzerland, if their economy deflates, in other words, prices get cheaper, your eggs get cheaper, your cars get cheaper, or compared to other currencies that you import from, if your dollar gets stronger, then you can import from those countries cheaper. Your standard of living, it goes up, right? You get richer because your savings can now purchase more shit. And that's really all money is good for. It's just a fucking number that you use to exchange it for goods. If I decide that I have too much money saved, then I spend it on shit. That should increase my general happiness, but it doesn't. Like, that's just a general economic theory. But it's straight up nothing. Money is always sitting in someone's account. It doesn't get burned when I spend it on it gets burned for me when I spend it on a fucking car or a bike or whatever the fuck, a meal. But this money literally just goes from this account to someone else's account. So from my business, I'm considering myself a business, to a different business. And then this business has it, and then they decide to pay their employees and their distributors. or they're like suppliers, whatever the fuck. And that money then sits in their account, and then they can then give it to other people, and then those people give it, and that's how we're all connected through this exchange of value. So I'm not going to people and trying to pitch my skills to then get everything in life. I just get paid a dollar value, and then from there I can exchange it. But it's just a fucking number. It does not come from really anything other than what we paid for something yesterday, right? If I go to the store and toilet paper is all of a sudden $300, I'll say, whoa, 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 whoa. Toilet paper was not this expensive. Why the fuck is it this expensive? And because of yesterday's prices, I expect it to be somewhere around the ballpark that I paid last time. And if it goes up a little bit, I'm not going to notice it, likely. But over a long term, that inflation, we don't recognize it. And we also get paid more, so it's not taking a larger portion out of our check in theory. And if it does, then some other brand comes in. But the point is that everyone is looking for a certain safe store of value, because this money is just money. Money in itself does not provide me happiness, okay? It doesn't. So I put up this note yield. Back in the 80s, you were getting like 15, 16%. Some years, 83 down 10%. Back in 84, back to 14% on your money if you just didn't spend it. If you gave it to the government and said, here government, you do whatever you need with it. And then the government, because they are in control of printing more money, they can just print more money and inflate the economy. So you give them your money, and that debt, for them, they pay it back to you by just printing more, and inflation helps that whole bubble. But people have been doing this for so long that you don't really have anywhere for it to go. So if our economy starts deflating, we all get richer. If we have savings, otherwise the debt that you hold, you buy a house. You have a $300,000 house and you get a loan, and if your economy starts deflating, that home is going to get harder and harder and harder to pay back. And in theory, if it keeps inflating, it gets easier and easier to pay back. But you're nearly at zero, okay? Do you get this? You're at 1.5% right now. And after zero, if you give the government money, they're going to give you less back. And if that's the safest store of value, you're fucked. Because you're giving less money back. And as a taxpayer, you're the one giving money to the government. Huge math. But anyway, this trick of inflation has worked for like 30 some years. Again, keep in mind, we now have this great economic time. We have a lot of experiences available to us. REI is a thing. REI is fucking lit, y'all. I love REI. You go to your local grocery store. I love all the cheeses that we have available. All of that is sick. But the money sitting in my account has to be a store of value if I'm going to use it in the future. And otherwise, there's no point to keep a savings. And if there's no point to keep a savings, you're never going to retire. Your mom, who's almost 60, isn't going to retire. She's just going to have to keep working with her health problems, and eventually she's going to fucking die. And she's never going to have that time off that you've been saving your whole entire life for because you were promised that you could retire. Fuck. Okay, anyway, let's pull up some different stores of value, some other currencies, because that's all money is. The Chinese yuan, as of this month, August, well, now this month, is now worth less than it was back in November of 2018, is back where it was in February of 2008. I don't have price data from behind that. But the point is, with tariffs, Trump is doing some tariff bullshit. If you don't understand that, I'll break it down for you. Products coming into America now cost more money, so Americans with their limited supply can't buy everything that's coming in. Did I say that right? Because Chinese products cost more, we're not going to be buying as many Chinese products in theory. There's other people in America that will open up factories to produce those products or whatever those goods that are coming over. We're going to start manufacturing it here, or there's more people that are able to compete here if the price of those products gets higher. So we don't need everything from China. So China is still looking for US dollars, and we are giving China less dollars because there's more business here from the price being higher on these Chinese products, and more people are competing. So this money capital that was only going to China is now split, going here, and some of it's going over here, or some of it's going to another country, or some of it's going to this country, or some of it's just not being spent at all. And because we're giving less over here and China is still using the same amount of US dollars, there is now an excess supply of Chinese yuan, and that is pushing the price down for the Chinese yuan, and the US dollar is getting strong. Basic supply and demand concept. We're going to look at the US dollar versus the Uruguayan peso. I go off the Uruguayan peso rather than the Argentinian peso. If you've been looking at the news, their mutual funds froze redemptions this past weekend. Happy Labor Day. It's not Labor Day in Argentina, but the idea is they have been giving, Uruguay is just a tax haven. Private banking, most of Argentina's wealth is in Uruguay. I'm going to get in trouble for saying that, but it fucking is, because Argentina's taxes are fucking shit. And your peso here is been worth, in this past year, is worth 20% less now. I don't even want to compare the ARS to the US dollar. Let's look at that shit. God. This time last year, let's see, September last year, you were getting 25 cents. Now you're getting 17 cents. That's trash. You're dropped 30%. But they froze redemptions on their mutual funds. So this exchange of value that you thought was an exchange of value, they're like, no, you can't do that. So its value is now zero. That sucks. That money that you thought you had in your savings account, you can't redeem it to go do whatever. You can't buy a coffee with it. You can't trade your stocks to go buy a house. You can't use it to pay your rent. You can't do it to get to another country. You're fucked, okay? And on top of that, over the past year, your purchasing power has gone to shit. If you thought you could buy a lot of US goods, you can buy 30% less now. That's rough. Let's look at the Great British Pound, USD. Again, here back in 2008 or so, it was worth nearly 60% more. Over the past 10 years, it's gone down. And if this breaks right here, look at this. This is the low. We're seeing more volume come in as it's been dropping the past 3 years, which is sick. This could be due to electronic trading on this exchange picking up. But if it drops here, where do you have back data? You don't. It's never. Back in 93, it still wasn't at this shit of an exchange rate. So the US dollar is getting stronger. People are considering it a safer store of value versus their country. If this breaks, this line right here, this January 2017, it reached a low of $1.19, almost $1.19,860. And this, so far this year, has reached $1.19,580. If this closes below this, that is really bad. With that said, look at this past month. Back in August, we had a lot of volume come in above average. This is this 100 period average of volume. We've had more than that, and this price moved nowhere. So you do have people that are buying and coming in and saying, you know what, I'll take a gamble. I think the British economy is going to come up. I think it's going to recover. But at the same time, there's also just as many people looking to get out in case something bad happens. This is the volume profile, so most of the sellers and buyers have been exchanging over the 130 mark. I'm not telling you to long this, I'm not telling you to invest in this, I'm just saying be aware of what is going on. So from this, money is generally fake. We get prices based off of the day before, what we are used to. And if we have a savings and we're looking for a safe store of value, people are looking at the USD. Again, I'm looking at economies like the Chinese yuan, the Uruguayan peso, just economies that are in general in debt, that aren't doing too well. Propaganda, okay. But let's start looking at bank stocks, okay? I'm gonna look at a few bank stocks and then I'll leave it at that. Your JP Morgan Chase, best it has ever been. But when you look at this store of value, straight up, it's never been worth more. And the past 3 years, almost 3 years, it's been at a high between $1.20 and really like $100. I'm not going to count these 2 months for December last year, but you can say, okay, $90. For real, you don't, when people start selling this, new people have to buy it. And if new people are not buying these stocks, then again, just like the yuan, if more people that are holding this, because they're all in profit, start selling it, if new people aren't there to buy, and with what money are they going to buy it if they don't have money, because they're in debt? People are selling this, people can't buy it, and the price goes fast, really fast. Right now, this is the level you're watching. This engulfing candle of the previous month really crushed this. I'm just saying, be aware. This could be a reverse head and shoulders. If you see it come around the 103 mark again, if you were looking to long it, I would long it, but I would cut it quick, maybe 5 or 6%, and I would hope that it breaks. I really do. But if it doesn't, the second it closes below this 95, you have some buying at 81, you have some buying at 91, and then most of your volume profile, where most people bought it over the past 20 years, most people bought it down at $50. So that is a quick profit right there. I'm not telling you to short this. I want everyone to be safe, but just be aware, this is your financial institution. These are the ones that are holding your money. What is their stock worth? Let's look at the next biggest bank. Let's look at Bank of America. And I'm not looking at like international. I'm looking at just straight up America. So past 20 years, God, what has it been doing? It had a massive run up into 2008 and it collapsed and it went down to like $3 and now it's sitting at 27. Really, this is what you're looking at, worth of valuable data. A lot of this since 2016, around the $18 mark. This is where a majority of people have bought these shares. That's where most holders of these shares are sitting at. If it breaks above this $32, if it raises that extra 20% and it breaks above, sure, you have $40 as a target, You have $54 as a target. You have $47 a target. But most of the volume profile is down here. It does not look pretty at all. So again, let's pull up Wells Fargo. I'm already going at it. Your Wells Fargo data, it hit a high of 65. It looks like, again, just like a lot of charts are looking like this. It is on the brink of support. If this closes below $44, only a couple percentage lower than where it is at the moment, where do you pick back up at? You pick back up at $36. And if that doesn't drop, like, here's your volume profile, dog. Straight up. A lot of people have purchased Wells Fargo between $36 and $21. Not trying to scare anyone, but if your bank, who has these shares, this ownership of this company, if they can't sell their company for money to then give you money, or if they can't keep their stock prices up, then they don't have money. And it's fake. Look, let's look at Citi. Citi was absorbed back in 2008. Look at that shit. That was worth like $500. Now this shit is worth like fucking $60. Thanks, American bailout. But again, look at this. It's been hovering on the $62, $63 range. December of last year hit it particularly hard. This doesn't look as bad as some charts, but still, it is on that brink where it's reached new highs, and it is almost breaking that lower low. This is either the beginning of financial collapse, or this is where you long it for maximum opportunity with growth. So you have to hope that buyers come in here, and buyers of some sort will pick this up and swallow it, and then they gotta sell to people at a higher price, because we just agreed, or I just agreed, that it's a zero-sum game. So for me to make money, someone has to be giving me this money, whether that's Citibank buying their own stock back, or someone else trying to profit off of that. And if people don't have money to then buy this stock, then I'm just leaving it up to Citibank to buy it. And if they don't have money because they've loaned it all out to other people that can't pay them back, who is going to buy this stock for me that I have bought? Anyway, if you look at the past 2 months, past year or so, it looks like sellers have came in around the $72 area, right there. So, you know, you still got like 20% to break, which, don't get me wrong, plenty of opportunity for you to long it. But right now it does not look on the up and up. And if you're looking for a safe store of value that you can then make work for you, where is that? That's just something that I want you to be aware of. I'm going to go back to this Bitcoin chart. I'm not saying that Bitcoin has to be your store of value, but it does have some good ideas. That it's decentralized, it's not owned by one person. So your governance, you can become a part of it by running your own node. It's never closed on work days. There's a hard cap. There's only 21 million Bitcoin ever to be there. So your government can't produce more Bitcoin. Your Citibank, your Citigroup can't all of a sudden have hella more shares that devalues your currency, Satoshi Nakamoto could come on and list 500,000 Bitcoin on the market. 100%, he could. And that's one guy. But where else is a safe store of value? Gold has always been up there with what people use to transact with. It's not economical nowadays for me to like bring gold, because then you need a scale and you need a test. Okay, you gotta make sure it's real. That's just not practical in the amount of I'm not gonna pay for a coffee with gold. I'm not. But if you have these excess savings, what do you do with it? If you save anything, how do you make it work for you? And by buying a company at its top, you're not going to make it work for you because someone below you is selling to you. So you got to pick companies up off the floor if you want to profit for maximum. And what do you see existing in the future? Gold could be it. I would be careful right here. It looks like this is where previous support was back in 2011 to 2013. But if you break past here, this 1570 level or whatever, you have a 1700 level or so. And if you break past this 1800 level right up here, then the sky's your limit. And we already said that more money was going to be printed in each year. So what do you have to lose? Thanks for listening to my rant. I hope that you benefited from it. I hope that you make the best possible choices for your future. If you need more resources, I'm going to link them down below. But also just give me a call. Give me a call on the phone. Say, hey, bro, degenerate, I need some help. Can you walk me through this? I think I understand it. I think you understand it. And I'll say, yeah, I'll come over with a fucking pen and paper and we'll talk it out. And just be safe, manage your risk. Don't throw everything you own into one asset class. Straight up. Diversify a little bit into something that makes sense to you. Please don't buy Tesla, because Tesla has a lot of debt. And if there's no more money to inflate the economy, or if inflation is not a thing anymore, then that debt that they hold is going to get harder to pay back. That $30,000 car that they're selling you is going to be harder for them to sell. They got to sell it for less. If they have to sell it for less, they have to make less profits. That is not good for a company that is generally losing money across the board. I love you, and I hope today we both appreciate the opportunities that we have. You had the opportunity to watch a 34-minute video, and I had the opportunity to talk about this with you for 34 minutes. And yeah, enjoy your day, y'all. Thank you.